Jan, you've only been at Regarding Capital Management for a little while, and now the portfolios are all being restructured. Is this your input?
Alec, yeah, I don't think we're not restructuring any of the underlying portfolios. What we are doing is to make sure that the names of our portfolios are appropriate, that it reflects the underlying portfolio mandate and also strategy, that our fees are aligned across the range of portfolios, that the benchmarks are appropriate. Because we, as the guys running the portfolios, are also big investors in the portfolios, and what has happened over the history and the life of RECM is that we've only launched those types of funds that we would put our own money into, and I think over time there's just been a few bits that hasn't been aligned, and we're just putting that together.
So what does it actually mean for your outside investors?
Well, if you look at the range of funds, we believe in a very small range of funds. We only do a few things. We don't think we need a large range of outside funds to cater for the needs of most investors. So if you look at the fund range, the significant changes happens in our equity fund, where previously we had quite a flexible mandate, and we allowed ourselves, when we can't find enough cheap opportunities in the market, to rather hold more cash in our portfolios. What we have found is that investors have told us that once they've decided to invest with us in an equity fund, their preference is to be invested in equities, and they wouldn't want us to take another view, even if it's from a bottom-up perspective, to have more cash in our portfolios, and we've listened to that. So our equity fund will remain a fully invested fund from now on. So that's the one change from being flexible before. And then we also run a global fund, which is a multi-asset class fund with an absolute return orientation. But the way we set it up initially is we benchmarked it against the MSCI index, and it creates a bit of confusion because we are absolute value investors. When we can't find value in the market, we like to rather not invest than invest because we have to. And if you then have the MSCI as a benchmark, it creates confusion. So we will be launching a pure equity fund where those investors that want our stock picking skills and want to invest with us for our stock picking skills can be fully invested in equities. And those investors that like to invest with us because they put a significant part of their portfolio with us and we look after the entire portfolio, and we then have more discretion and use the flexibility, they can remain in our existing fund. And for that one, the benchmark will change from the MSCI World to a US CPI plus 6% benchmark, which we think is quite a tough hurdle to beat.
Graham, we've got a quick question from, Jan, we've got a quick question from Graham with regard to the changes that you've made there.
Yeah, it's more a comment, if I could. It's absolutely right. When you've got an equity-only mandate, you're kind of forced to invest. And we agree with Jan and them. If it's difficult to find value, you almost want to do the right thing. Well, not almost. You want to do the right thing and say, if I can't find anything to buy, then I shouldn't be buying. But then you always get this mandate conflict. So I think what they're doing is very, very smart. It just removes any sort of confusion. It says if you want equity, understand you're always going to be exposed to the markets, and your job is then not to decide whether the market as a whole is cheap or expensive, but you're really doing the best within that asset class.
Yeah, maturing, Jan. I suppose Regarding Capital Management's now had its 10-year anniversary, and these kind of things from a smaller fund or from a smaller operation, you've got to refine them. But maybe just to close off with, you did mention in the beginning that you guys invest in your own funds. Are you allowed to invest in shares outside of the funds that you own?
Alec, we have a personal account trading policy, which is disclosed, and you can find it on our website. But most of us, the bulk of all of our money is invested in our own funds, and I want to make the point that we pay exactly the same fees as our outside investors. There's no special deal that we get a zero share class, etc. We pay exactly the same fees on the same basis as our outside investors. And if I look at the investment activity of our team, there's a very small amount of personal account trading, investing in specific shares happening. Most of our money is invested in the funds.